Hello, and welcome back to the Argyle Finance Solutions Expo. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would love to introduce our speakers, Jacob Abrams, Solutions Engineer at Lease Accelerator by Insight Software, and Nikhil Gupta, Senior Consultant at Lease Accelerator by Insight Software. We are excited to have Jacob and Nikhil with us for a thought leadership and demo titled Optimizing Lease Accounting Through Data Centralization and Collaboration. Welcome, Jacob and Nikhil, and over to you.
Good morning, good afternoon, everyone. Welcome and thank you for joining us on our webinar today, Optimizing Lease Accounting Through Data Centralization and Collaboration. My name is Jacob Abrams, and I'm a solution engineer here at Lease Accelerator and Insight Software Company. Before we get started, I'm going to be reviewing a few housekeeping items. Please use the Q&A box to submit questions at any time during the presentation. You can also view related content on the left-hand side, or you can request a demo or book a meeting to chat with a team member at any time. This webinar is being recorded, and you will receive an email with a link to the on-demand recording within 2 to 3 days after the webinar. Lastly, there will be a brief exit survey after today's webinar. This survey will give you an opportunity to let us know if you'd like a 30-minute meeting with our team to continue the conversation. I'd like to first introduce my counterpart on the webinar, Nikhil.
Thanks, Jacob. Hello, everyone. My name is Nikhil Gupta. I'm a chartered accountant working as a senior consultant at Insight Software. Over the past 3 years, I have had opportunity to lead and support Lease Accelerator implementation for the compliance of ASC 842 and IFRS 16 for a wide range of clients, including several Fortune 500 companies. Today, I'm excited to share some of those experiences with you and discuss key insights from those projects.
And again, I'm Jacob. Over the years, I've worked in business development, having conversations with clients around tax accounting, external and internal audits, as well as reporting. I joined Lease Accelerator at the beginning of 2020, so just between the waves of public and private companies trying to adopt the new lease accounting standards. Since then, I've worked with many organizations to get compliant, as well as maintaining and going beyond that compliance to now focusing on optimizing the end-to-end lease lifecycle. So now for our agenda for today. So first, we'll be starting with overviewing common lease accounting challenges. Next will be key elements for sustainable ongoing compliance. Then challenges of adopting with spreadsheets. Next, the value of lease lifecycle automation. Then we'll get into some case studies and then finish off with a Q&A. Jumping into the content here, I think we all know leasing and lease accounting is a complex operation, and this slide does a great job summarizing why. Let's speak on some of the challenges. One is simply the differences between lease contracts. The first challenge was finding all your leases, which all companies should have a good handle on now. The challenge now is more so how do you create a repeatable process to extract all the key accounting bits out of a lease's contract that would be needed for the accounting. Another challenge, we all know that leases aren't static. It's imperative that the people utilizing the assets understand the proper processes to pass lease changes to the accountants and why they must do so in a timely manner. Another challenge that compounds on this that we'll speak on later too is that you may have multiple different systems that hold lease information today or want to receive lease information. It's good to think about how you can automate these platforms to work together via integrations. The last added piece of complexity is that there's likely different stakeholders that touch leases depending on who they are. Perhaps you have a centralized real estate team to manage your lease properties. You also have category managers for the equipment leases. Who's in charge of returning the leases on time? Is there a procurement team in charge of finding replacement assets? And then once the replacement asset is found, does the treasury team secure the financing arrangement? Since leases may touch so many different stakeholders internally, it's really important that all stakeholders are involved in the lease management lifecycle. One of the challenges I mentioned is that the data or these lease contracts may exist in different systems throughout your business today. For example, sometimes servers or other IT equipment may be in an IT asset management platform. Maybe you have your automobiles in a fleet management system, but keep your real estate properties in a real estate administration solution. The point is that the relevant data for your leases may exist in many different systems. It really just makes it a difficult task to pull all the relevant details on a lease. For example, does your real estate admin solution track all the rent escalations? Are those details instead in your accounts payable system, or hopefully both? How about your tenant improvement allowances, and so on? You'll want to think about what critical lease accounting attributes exist in what systems and where are the most relevant details found. Thankfully, the time period where you were gathering your lease data should be over for everyone on this call. Now clients are thinking about how to automate these data sources to work together, and we've got a few slides later on speaking on these automation opportunities. Another challenge I mentioned is accounting for all the changes to leases over time in an accurate and timely manner. In terms of the events that could happen over a lease's lifetime, there's a lot of different ones: renewals, buyouts, early terminations, and contract renegotiations, just to name a few, and all of the different accounting impacts those changes may have. Not all lease events are created equally. Some are easier to account for than others. Take, for example, a contract that you renegotiated for an extended term and a lower payment. Through this extension, your contractual end-of-term options may have changed, so you have to reassess what you're reasonably certain to do at the end of the term. It's also difficult to sustain compliance, as you'll need to develop auditable processes and controls to keep up with those changes. Things change, like the types of leases, the lessors you engage with, the stakeholders managing leases, and for this reason, it is critical to have a standard, repeatable process in place that ensures consistency even with the changes happening around the leasing program. You'll need to think about data management and where all the information is stored. If you have a tool, do you have as at date reporting, version control, and the ability to easily import in bulk leases and lease events? We have seen significant staff turnover as well as reductions in staff responsible for compliance. And turnover means staff that were not involved in the initial decisions made during implementation. These are challenges that place more emphasis on the strength of your processes and technology. We'll speak about this further on a future slide, but questions to ask yourself around staff turnover might look like the following. Is there built-in training if we have a lease accounting tool? If not, how will we train the new accountants? Are there built-in controls and guardrails to ensure new users follow the correct processes? Do I have sufficient role-based security so new users can only record and access the items dictated by your internal policies? And then lastly, do we have audit trails to understand where a mistake was recorded so we can educate on how to avoid these errors in the future? Most of all, you will need to consider how you can optimize or automate processes to become easier in the future, so it will constrain less resources and become a more controlled and accurate process with fewer mistakes. Since organizations are now much more aware of all their leases, we are seeing a shift from companies only looking to be compliant to now looking to lower their costs of leasing through many avenues. The amount of automation and control built into your technology is typically inversely related to the staff you require. We are seeing companies make decisions today to decide on the right mix of technology versus staff that were different prior to COVID. And once you achieve ongoing compliance in a systematic, repeatable way, organizations, especially in this economic environment, look for ways to turn this accounting standard from being a cost of compliance into an opportunity to make better business decisions and lower their cost of capital. New standards require exercise of professional judgment in many areas, stuff like transitional elections, ongoing policy elections, thresholds for lease classifications, discount rates, etc. High level, there are two key components that set an organization up for sustainable lease accounting, and they are the people and processes. We'll speak about it later on in the slides, but the third component that can bring these two items together is technology. A good software gives you the tools to document through processes, and apply them consistently and automatically, once they're set at the corporate level and updated when needed. Workflows enable existing and new employees to capture and maintain leases using a set series of steps, including validation tools to minimize human error at points of input and straight-through processing. Controls prevent errors as well as unauthorized access. If you don't plan on selecting a software to help you with this workload, it's critical that you develop these processes and controls in an auditable manner so you can provide that detail to your auditors. Just wanted to present this at a high level that the way most companies have achieved compliance is by getting a technology platform to account for their leases. The biggest feature is, of course, that these systems can generate the journal entries and disclosures that are needed for compliance at the push of a button. But these solutions should also offer additional features which can help ensure sustainable compliance. These platforms are generally self-service, where you can record all the changes to your leases and it creates the journal entries as it should. Many systems allow you to make bulk changes to leases as well, and some even have a monthly close that will create adjusting entries too. A good technology should also help you understand when lease events need to occur, including most commonly end-of-term management. That may mean an email notification or report that ensures you have recorded all events, ensuring completeness of data. Another piece to consider is that these systems generally have an auditable workflow and robust controls, so that process can be contained in the software instead of needing to be tracked manually. Technology is there to help you develop a repeatable process to account for all of your leases. It's there to ensure you have controls in your process to ensure the right decisions will be made in the future. Most of all, technology is there to lessen the degree to which people need to spend effort on a day-to-day basis. The best technologies can offer additional functionality to help your business make better decisions in the future.
Thanks, Jacob. Let's take a step back to when lease accounting standards were first introduced in 2018-19. At that point, most organizations were laser focused on getting compliant. That meant tracking down leases, accurately recording them, and meeting the deadline for the transition. But here's the key. Many of those teams were already stretched thin from a resources standpoint. They didn't had enough time, budget, or staff to go beyond basic compliance. Some didn't fully understood the complexity of the standard, while others underestimated the effort it would take to maintain compliance over time. Fast forward a few years, and what are we seeing? That a lot of those same organizations are rethinking their approach. Many are moving off spreadsheets or upgrading their entry-level system that help them get compliant, but now fall short when it comes to staying compliant. They are realizing that sustainability requires more than just one-time setup. It requires repeatable, controlled, and automated process that can adapt with the business. The reality is controllers and their teams simply don't have enough time or resources to keep doing this manually. It's not sustainable to rely on spreadsheets, disconnected system, or tribal knowledge. What they need is a centralized data, consistent workflows, and automation that support accuracy. Without that, team risks falling behind, making errors, or spending far too much time chasing down lease updates. Next slide. We see a shift in our marketplace. Originally, our clients were mostly concerned with getting compliant at all cost. It was a reactive event. I'm sure that some of the people on today's webinar that still have PTSD from the original adoption, especially if you have a lot of leases to find across different geographical areas. That compliance push did something important though. It forced collaboration. Real estate, equipment, and accounting teams that used to operate independently were now suddenly connected. Processes were built, knowledge was shared, and over time, those organizations developed a repeatable and sustainable processes. Now we are seeing a next stage, a shift from compliance to lease lifecycle value. Companies are moving beyond spreadsheets and basic tools to solutions that automate, streamline, and optimize. This isn't just about meeting standard anymore. It's about saving time, reducing cost, and gaining real ROI. Stakeholders are engaged across departments and conversation has changed. It is no longer how do we stay compliant, it's how do we use this process to drive value across the business. Next slide. So in the previous slide, I mentioned the time and cost savings. How do we go about actually achieving that? We'll now take a look at various components of lease lifecycle and discuss how we address the pain of the individual process owners. Next slide. Back in 2019, lease compliance was a high priority, and once lease accounting compliance was achieved, controller moved on to their next hair on fire project. So their focus shifted elsewhere, leaving behind a fragile process. The result, manual work, weak controls, and monthly scramble for data from multiple teams. One of our customers summarized this aptly. He said, to close the books each month, we have to get data files from our real estate teams and from someone at each of the plants who have equipments about what changed with those leases. It's some manual back and forth work, which requires a lot of data manipulation. Next slide. Thanks. Fast forward to today, and picture is fragmented. Lease management touches multiple functions: capital planning, procure to pay, record to report, but no one owns it holistically. Each owner faces distinct challenges. Treasurers struggles with inconsistent decision making on lease versus buying. CPOs battles overpayment and poor data abstraction. No one actually owns equipment tracking, causing duplicate or missed payments. Real estate function misses key lease dates due to bad data, and controllers still wrestling with the same manual work and poor controls from 2019. On top of that, most teams are using Excel or isolated point solutions, leading to no accounting trail, no accountability, and no insight. Next slide, please. Thank you. Lease Accelerator changes the game by introducing a SaaS platform that unites all stakeholders, treasurers, controllers, CPO, and real estate, into a connected lease lifecycle. Each process owner gains a purpose-built application. Our lease versus buy tool helps treasurer make accurate financial decisions. Once the decision is made to lease, CPOs utilize our pure lease platform, which is for competitive sourcing to get the best deal and best terms. Everyone benefits from better tracking of leased equipment and handling updates through our asset lifecycle manager. Real estate manager helps in managing key dates and accurate processing of data. Lease accounting manager for accurate reporting and compliance. The impact: proper audit trail, accountability and data quality, and 10x ROI through performance insights, cost savings, and free cash flow. Over to you, Jacob.
Thanks, Nikhil. Yeah, I just wanted to jump in here. This slide speaks to the integration opportunities both between the individual pillars of the system as well as external upstream and downstream platforms. It's a busy slide and I don't want to bury you in the details. I just want to leave you with the awareness of opportunities that exist to benefit from straight-through processing via integrations. The overarching goal is, again, to minimize human effort and risk of human error.
Okay, thanks, Jacob. Here, I want to highlight 4 key areas of focus in a lease lifecycle that drive real business opportunity. Sourcing is about making smarter decisions upfront, choosing better lease terms and conditions to avoid issues down the line. End of term management helps us avoid unnecessary evergreen payments by ensuring decisions such as renewals or returns happen on time. Administration focuses on managing the leases and assets effectively throughout its life cycle, improving compliance and cost tracking. Lastly, the centralized repository gives all the stakeholder visibility into lease lifecycle, making it easier to coordinate, manage, and make data-driven decisions. Next slide. Okay. Now, one of the most effective and easy to adopt enhancement is integration, primarily because it doesn't require a major overhaul of the existing processes. We have many integration options at Lease Accelerator, but a great one I wanted to mention that we call a fleet integration. This would be an integration where your lease accounting subledger would pull data directly from fleet management tools. Without the integration, the typical process would look like user adding leases, either via Excel template or via user interface. Typically, these users are reading from the contracts and abstracting all the details into their lease accounting software, which creates inherent risk. That risk can be eliminated with approval workflows. Some companies use abstraction providers, which does ensure accuracy but can be costly and is much less common for fleet arrangements than the real estate agreements. We see clients looking for more automated process here, where we pick up the new leases and changes to lease automatically. A critical point to mention is that many fleet systems are maintained by lessors who will update new leases and lease events in the tool on behalf of their clients. The end result, if we integrate to a lessor maintained fleet management system, is straight through processing. The lessor adds the leases as soon as it's executed, it's automatically picked up by Lease Accelerator and automatically accounted for, which means the entire data entry and reviews goes away for the accounting team. We also offer seamless integration with our customers' ERP systems, enabling journal entries to flow automatically each month, eliminating manual intervention and significantly reduces the risk of human error. Additionally, clients have the option to integrate their FX rates, eliminating need of manual loads, ensuring accurate and up-to-date financial reporting. Another process efficiency driver we see our clients adopting is integrated real estate management. Lease Accelerator offers an integrated property administrator platform, which is called Real Estate Manager. What we found in the past is that client had challenges with duplicate data entry in the system, typically entry into a lease accounting system and a real estate admin platform. The other challenge is different data across tools, meaning challenging and time-consuming reconciliations and no one source of truth. Abstractions, especially for real estate contracts, are challenging. This further compounded by the having a system with different bulk import templates and each system wanting to capture different information for its purposes. By having an integrated real estate management platform, clients are eliminating one of their abstraction and eliminating different data across tools, which provides one source of truth. Real Estate Manager also has control points in its along with its integration to accounting, ensuring that both real estate stakeholders and accounting stakeholders have provided necessary reviews and approvals. Next slide. Okay. I'd like to discuss one case study. This one is mostly on limited resources and having a dedicated team to handle their leases. This is a logistic provider. They worked in the background to implement this software over a decent chunk of time. It was more so treated as a background project, secondary to their day job, where they just worked on it with any extra time they found. This project was undertaken by a decentralized team made up of a lot of members existing in different countries. Some of the members were sitting in North America, some in South America, and some in Europe as well. This company experienced some pains both adopting the software and maintaining their records for about following year. They are doing good now though. The result of the challenges in adoption were just mostly because the multinational teams did not quite have the right expertise in terms of who should be running this program. The difficulties they experienced after adoption were coming from making updates to leases on time and recording those changes accurately. Their process was pretty much if you work at the business unit where the lease asset is used, you should be the one recording those assets and changes across their lifetime. Something difficult to do if you don't have great knowledge of these standards. For this company, the right call was to dedicate a single team to the ongoing compliance under new standards. I'm not suggesting this should be right call for every organization on today's call. Rather, I am suggesting rather I am suggestion had this company. The sentence doesn't look right. Rather, my suggestion had this company taken more time to evaluate the leases they have, their complexity, the amount of changes they undergo on a routine basis. They may have initially considered assigning dedicated resources to this project and had a smoother adoption process. They now have a team of 3 people entirely dedicated to lease accounting. The other key learning is that it's critical that people who are running this program are well aware of the processes and people involved, that they are aware of what success criteria look like. They need to be aware of all the resources and people that will help them through this process. If your portfolio is this complex, it's well worth considering a creation of center of excellence so that you have ownership over your leasing program. These stewards can help the other business functions that are touching the leases to give the necessary data to accounting. New lease tools, softwares can be used for more than just accounting and compliance. Other organizations can see a lot of downstream benefits from creating a process of sustainable compliance. Take a look, for example, a process or tool that is really great at notifying you about EOT events. This in turn will help your organization return leases on time so they can get newest and greatest equipment as soon as the lease has expired and avoid any costly scenarios where you are paying beyond your end of term. If you have all your leases in a tool with robust reporting capabilities, you should be able to determine which leases were most advantageous to your company in the past by running the reports for your analysis. Through an integrated lifecycle approach, tedious tasks like data entry or abstractions can be performed automatically, freeing stakeholders to work on more strategic projects. Okay, over to you, Jacob.
Thanks, Nikhil. So we mentioned that companies are developing a better process around sourcing their equipment. That way, the way that is generally achieved is by adopting a lease versus buy as a control point in their process. What we have found is that many companies operate today. The way that many companies operate today for their leased equipment sourcing is a decentralized process. Maybe it rests in the hands of the plant managers who are allowed to lease from a preferred vendor if they have the appropriate budget. As such, they might not be too interested in saving the company money or who is the best company to lease from. After all, they just want their plant up and running, right? So many companies are already aggregating their purchases for lower overall costs. Why not do the same with your leases? A lease versus buy creates a centralized control point so you understand when your company needs to lease new equipment. If you understand when your company needs new equipment, you will be in a position to aggregate all needed assets into a lease line, which can drastically lower costs. Maybe you are already engaging in lease lines, but a lease versus buy also helps you to understand what is financially advantageous for your company at any given time, whether you should purchase or lease, which is becoming increasingly important due to changing interest rates. Don't forget, a lease contract is a financial obligation no different than other debt arrangements that your finance or treasury organizations would manage. And the next related step to a lease versus buy is to consider your process for finding the financing for the selected leases. We highly recommend standardizing contractual language to ensure you will not be penalized at lease termination. This standardization also provides simplification of the ongoing administration and compliance requirements. I've seen lease versus buys performed on Excel templates or through a system such as Lease Accelerator. It's great if you perform them in Excel, but even better if you have them in a system that offers analysis on your historical preferences for asset types, classifications, terms, etc. Another control point that we mentioned and we see a lot of companies adopting is a more diligent end-of-term management process. The end of one lease is typically the beginning of a new lease that provides your asset users with a new piece of equipment. Why is that important? A new piece of equipment likely has better safety features. It likely has more features that improves employee satisfaction as a whole. It may also have lower emissions, which may help your company achieve emission goals, along with just being better for the planet. It should enable productivity and less downtime. And then from a financial perspective, you already paid for the equipment. Why pay more than you have to for what is now likely an old, outdated piece of equipment? For a similar price, you get all the benefits of a new piece of equipment. And if you like to keep your assets forever until they are ready for salvage, then you realistically should be buying the assets themselves. If your company is big enough, I would wager that you have identified a lease, or maybe even a few, which have been in a month-to-month status, past end of term for a while. Notifications and reminders along with key metrics, identifying exactly how much your organization is paying beyond end of term, what is called evergreen, is key to helping manage leases at end of term. Where lease versus buy is the beginning of the leasing process, end of term management is the end of the process. Bookends that are key controls to optimizing your leasing program. Best case scenario is if you have all this data in a centralized tool, especially if you're also performing lease versus buys across your portfolio. This offers a centralization of data on what assets you lease versus purchase, and if you did lease, whether or not you actually leverage the financial benefits of that lease, or if something unanticipated happened, like needing to use a lease for an extended period, triggering undesired month-to-month payments. Now we're going to pass it over for a quick demo of our Lease Accelerator capabilities.
So all I've done at this point is gone to the Lease Accelerator website and logged in. Lease Accounting Manager is a true SaaS environment. You can access the data from wherever you are. It's all hosted on the cloud. So it's single sign-on and we are browser agnostic. Now this is our homepage, and just to orientate ourselves, this left bar is our navigation bar. So reporting, looking at a specific lease, whatever it may be. On the main screen here, we are first greeted with key leasing metrics on our dashboard, key accounting and operational metrics like our right of use asset here on the right, liabilities, expense information. As they scroll down, our cost details on the left, and then at the bottom, our balance sheet and income statement. These can be directly downloaded from this page as well. We also have some operational metrics. So if we go to the top, we can see what status our leases are in, so active, evergreen, and renewed. Now, one thing I like to cover on the homepage is my to-do list. So if we're thinking about a day in a life, I log in, I look at my dashboard. The next thing I'm going to do is look at my to-do list. Now, there are a couple different categories here to give you a sense of what you'd be doing in the tool. The first is to approve a deal, modification, or lease events. So we have an approval workflow in the software, and you'll also receive a notification for these to-do list items. From a lease lifecycle management perspective, we also have a bunch of end-of-term events that can be created automatically when applicable. Really common one would be recording an end-of-term intention and recording a comment. All these are linked directly to the lease, so if you click on this, you'll go directly to the lease record. The last thing I like to show before jumping into how we get leases into the system, so looking at our bottom right, we have Ask Alex, which is our interactive learning assistant. He's self-serving and here to help you after you go through training. Whether it's something you don't really remember how to do or you're new to the role, Ask Alex houses a large library of videos, articles, and step-by-step walkthroughs, so you can search in here and find all the info and documentation you need. My personal favorite are these walkthroughs. Simple example with entering a schedule into the system. We'll see the walkthrough here, and then if we click in, we see these big blue bubbles, kind of similar to an on-screen wizard pop up that'll help guide me through the process in adding in a schedule. Whether it's something complex or simple, he has all these walkthroughs ready to go for all users. Now, most of our clients use the bulk import way of getting leases into the system, so we'll navigate to bulk import and then select the appropriate file. So the file is called a PIW, or Portfolio Intake Workbook, that houses all of your lease information and then gets uploaded into the system with automatic validations as well. So front-end validations, just to make sure all the data is matching and all the data is properly assigned and accurate. So here's our validation messages at the bottom provided by the system. We see one is okay, so this Chicago lease is ready to be imported. What I'm seeing with our second lease is a red error showing me I already have this lease in the system, so it's going to prevent me from loading in any duplicates. Then the yellow notifications are recommendations or further details. You can still import the lease. Here it's just letting me know that I'm uploading a lease with a start date and a close period. I'm going to direct you over to the left here where it says I've closed my books as of February 2028. This new lease started back in October. So instead of loading this lease in and immediately creating the entries in a closed period, it's going to load the lease but not post any entries until the next open period being April or being March. So all those catch-up entries go in March, our next open period. So I'm going to go ahead and click import, load all the leases into the system. As it's doing this, the tool is automatically classifying all my leases under all my standards and automatically assigning the IBR rate. So we can click into this lease, and once we do so, we see this new navigation bar with options like deal history, documents, and deal summary for this specific lease. If we go into the deal summary, we can see that the IBR rate has automatically been assigned for you. We see our accounting classifications as well. So we see our tests that were the tests that were run that made this, for example, an operating lease under ASC 842. Also, something I like to mention, as soon as you bulk import the leases in, all of the journal entries are automated from commencement to end of term. So at this point, we have everything we need to be compliant. Next, you have all your date information here at the top, the lessee details on the right. As I scroll down, if we had any midterm or end of term events or payment adjustment events, they'd be here. Then we see our cost of financing, our terms, and then our overall payment steps at the bottom. So that kind of sums up this lease level view. Next, I'm going to jump into my reporting suite here. We're not going to go over every report, but I'm going to focus on the key ones here, like our journal entries. With all of our reports, they're going to see something that is very important here at the top, and that's going to be our as at option, meaning we can look back at our journal entries as of year, or we can look at them before we record a modification and see that before and after. Very important, especially before an audit, but really you can run this in any time period you want. So I generated these journal entries prior to the call. This is just the first 2 months of entries. What just shows is the initial creation of the right of use asset. We then see our payment entries, our interest that's accruing, and then as well as the depreciation expense. And then we do a reclassification from long-term to short-term for the lease liability at the end of every month. In terms of my GL strings, I have these 5 here, but you can have up to 11. And then from a currency perspective, we do track 3, transactional, functional, and reporting currency. Now let's take a look at our disclosure reports, which are run in a very similar format with the same options or configurations as I showed with journal entries. This is our maturity analysis, which is our 5 years and remaining disclosure. This is everything you need for the standard requirements and a nice, easy to read summary table. What we then provide is a detailed breakdown showing you how each lease is affecting the overall totals. So if your auditor ever wanted to do some sampling, see how each lease is affecting those totals, they can do so with this report. Lastly, we see the same totals at the bottom with the formulas built in. Now to wrap up the disclosure piece, I'll show our year-over-year disclosure or quantitative analysis. This is going to give you 2 time periods, typically run year over year, or you can run it quarter over quarter. This is going to have all of your lease costs. As we go down, your cash flows, and then your weighted average terms and rates. Again, all the formulas are included, and then you do have a detailed breakdown of each comparative period, showing you all your leases and how they're affecting those overall summary values. Now we'll jump back into the tool to show how we would record modifications in Lease Accelerator. We can do this in bulk, but for the sake of the demo, I'll show how to record an event. So let's go look at one of our leases here and go to record event. Once we hover over record event, we see all of our options available for this lease. One thing to highlight when it comes time for end of term, we see here exercise lease termination, and that record contractual buyout is grayed out. So this is a smart navigation bar. It's only going to let you perform options that have been included from your contract. This is another built-in control where we're not going to let a user perform a contractual buyout if that option was not indicated from the beginning on the original lease. So we centralize all your options into one list with built-in controls. So now I'll show an example of a modification. We could do a change of payments. Maybe it's just a one-time payment change. It would bring up this new tab, and then we could choose our dates. Maybe June 1st, we have this payment change, and maybe it's changing from 2,500,000 to 2,600,000 for our pay stub. I can go ahead and click save, and it's going to save that payment step for us. This system is going to recalculate all of the applicable terms, and then we can take a look at the new payment step. So if we go ahead, we can see now in the bottom, our new payment step for June 1st is shown in our payment steps here at the bottom. And then if we go up to the top, we see this payment adjustment event now for June 1st. So what if I made a mistake? I put in the wrong adjustment amount or did this for the wrong lease. How do I undo this change? We would just go to the right, these three dots, and then click roll back. The system will refresh and go back to the original state. So now we'll see the payment adjustment has been removed. What about my audit trail? So this is where I can go into deal history and see all of the events that happened. We can see that rollback, when, and who did it. And this concludes our demonstration of Lease Accelerator. If there are any other questions, please let us know, and we are also happy to do a more personalized demonstration as well. Thank you.
Thank you both so much for such an insightful session. I also want to thank everyone for joining us today. This session, along with all of today's content, will be made available on demand following the event. Our next session will begin at 12:35 Eastern, which will be a keynote titled The Journey to the AI Economy, Harnessing the Potential of Web3 and AI. Please click on the join button that will appear on your screen to be redirected, and we look forward to seeing you there.